The risk-based approach is all about prioritizing effort and resources to where they are needed most. In anti-money laundering, AML, we can't treat every customer the same. Some might be high risk and some might be low risk. So banks use the RBA to tailor their efforts, making sure that they focus on customers or transactions that pose the greatest risk of financial crime. Here's how it works. First step is risk assessment. First, banks analyze the risks associated with each customer or transaction. For example, a politician from a high-risk country might be assessed as high risk. Second step is risk classification. Once risks are assessed, customers are classified into different risk levels: high, medium, or low. Third step is tailored controls. Finally, banks apply specific controls based on these risk levels. High-risk customers may undergo more frequent monitoring or enhanced due diligence, EDD, while low-risk customers have minimal checks. Let's look at an example. Suppose a bank is evaluating two customers. One is a local small business owner with a stable income and no connections to high-risk countries. The other is a foreign politician with significant wealth and a history of financial transactions in high-risk regions. The bank would classify the first customer as low risk and apply standard due diligence, like verifying basic information. But the second customer, being a politically exposed person, PEP, would be classified as high risk, and the bank would apply enhanced due diligence, EDD, to closely monitor their activities and ensure there's no illicit activity. In an interview, if asked, "What is the risk-based approach?" here's a simple yet effective answer. The risk-based approach, RBA, is a strategy used by financial institutions to assess and manage risks based on the potential threat a customer or transaction presents. Rather than treating all customers the same, the RBA focuses resources on high-risk individuals or transactions, applying enhanced due diligence and monitoring to mitigate financial crime risks. For example, a foreign politician might be a high-risk customer, so the bank would apply more checks to ensure their funds are legitimate. The risk-based approach is central to how banks manage compliance and fight financial crime. As a fresher, understanding this approach shows that you can prioritize and understand which customers or transactions deserve more attention, which will definitely impress in an interview.